Hey, Tim Sykes here, and I have a really kind of cool video lesson. The stock market is kind of dead today, so this video lesson will be about some of my recent trades that I'm getting a lot of questions about. First, I should also mention the Sold Out Conference is this weekend in Orlando. I'm excited to meet many of you. If you go to traderandinvestorsummit.com, this is the website. If you go there and you click it, it says the conference is sold out, but live streaming is now available, and you can purchase your live streaming access to the conference. I think it's better. Let me shut myself up for a second. I think it's better for you guys, obviously, to attend in person. There's going to be some great networking, not just with me, but several other millionaire traders. So I'm excited for that. And also, I have to mention that not enough of you are using this Trader Checklist DVD. This is a free DVD. You go to traderchecklist.com. There is no catch. There is no BS. There is no upsell. It's just a straight up free 11-hour DVD. I know some of you guys can't understand that, but it's very important that you watch this because in the future I will be grading all of the stocks that I'm trading and considering trading on this scale that I introduce in this guide on a scale of 0 to 100. So please, please, please watch this. I don't want to deal with so many questions like, what is this scale? I've never heard of this. And I can just imagine what my life is going to be like if you don't watch this guide. So this is why I made it free, because this new scale that I've introduced, what I call the Sykes sliding scale, is going to be very important going forward with all my commentary, with all of my videos, with all of my trades. So please, this is so critical to your education and my sanity. So whether you value either or both, please, please, please put in the time. Watch Trader Checklist. Some of you guys have already started, but you've only watched like an hour or two. I know 11 hours is a lot, but this is life-changing information, and it's totally free. So think of it like you're investing in your future. It's better than watching Narcos. Although I think Narcos season 2 is going to be great. I haven't had time to even watch that yet. So let's get to the video at hand that I wanted to go over because I'm getting a lot of questions. A lot of these video lessons, it's cool because I just make these videos based on what you guys are asking me. And I know most of the time I say cut losses quickly when a stock is not doing what you want. So this is KPTI. They had a nice piece of FDA news right in here, and it was uptrending. Got all the way up to nearly 10, and I actually bought it on the dip here in the 940s, and it was nice after hours, like in the 960s, 970s. Pre-market it was like 970, and pre-market I should have done this video before so that you could see it. But those of you who are subscribers and you get my alerts, you know that it dropped very quickly from 970 pre-market to like 901. And this was all in, I don't know, 10, 15 minutes with like literally volume of like 10,000 shares. And now this is not necessarily the most active stock. It's not trading 50 million shares per day, but it is trading, 3 million shares a day. So when it's trading 2, 3 million shares a day and it drops $1 a share on no news in 10,000 shares, to me, that is a dip buying opportunity. I could have cut losses, but sometimes I do take the stance of my top student, Tim Grattani, where he says cut losses intelligently. 99% of the time, I say cut losses quickly. But when there is a low volume market panic, or not a market panic, a morning panic, especially pre-market, it could just be a few people who are just like, oh my God, the stock isn't gapping up or it's not doing what I want, so I'm just going to panic. You don't always have to panic. If there was news, that would be different. If there was heavy volume, that would be different. But what actually saved me on this, I mean, ignore it now because this is many days ago. But what saved me on the trade, I first bought it, what was my average? I think it was like 947, and then I averaged down at 901. So I got my average to like 925. And sure enough, 901 was actually tested twice. You had two opportunities to dip by it. But it went to the 10s that day, and then the next day the 11s, and then it failed. But I'm not talking about any of this. I'm just talking about when should you add to a position instead of cutting losses quickly. And it doesn't happen very often. This was a few days ago. MGT was another one. This happened yesterday. And this is what made me think I should do a video lesson on it. You have the same kind of, let me get this. So the day that I bought it, is my internet gonna work? Good. The day that I bought it, I was buying it in here in the 360s, nailed the breakout. It hit my goals of the fours. I just wasn't around to sell. I actually had a massage. I'm gonna tell you what I do in my life. I know I'm gonna get crap for it, but I had a massage. I'm stressed out with this conference and all my traveling, so I took a little time for myself. And my whole goal was to sell it into a morning spike the next day. So I didn't know that it was going to spike from the 360s to the fours all in an hour. And then pre-market, I did not wake up early enough. So I made two mistakes. I could have sold both times, in the fours and made 40 cents a share. I took the harder approach, but it was still a valid approach, and it actually, turned out to be better, I think, for videos and in a lesson for you guys. So pre-market, it's at 410, and again, no news, very little volume pre-market, and right like near the market open. This is a three-letter ticker, so it doesn't always open right at 9:30 a.m. So the volume is very light. It drops very quickly from 390 to like 368, the 360s, with hardly any volume, and there was no news. It was just people who were probably disappointed that it couldn't have follow through. You have to, when you're dip buying these, you have to also keep in mind where it is in the chart. So when it had the big green day, this is a multi-month breakout. So the next day, if it's not breaking past 4, it's going to be disappointment. That's going to lead to some panic selling. Same thing with KPTI. The big breakout, it had to try and break 10. So when it failed in the 980s, some people panicked and it got down to 901, even though the breakout later did happen, and then even later the breakout failed. So I'm dip buying these stocks that have potential breakouts. Too many people give up. They're like, oh, no morning gap up, done. It's over. With these stocks that are, uptrending on good news and spiking on good news, sometimes it doesn't just take one try to break out. Sometimes it takes 2 or 3. And, MGT, as it turned out, let me zoom in on yesterday. When I dip bought it at 368, so I doubled up on my position here. I could have gotten out, roughly break even, but again, just like KPTI, I'm playing it out in my head. Is this really the end? Is it probably not going to spike again? Should I get out? I mean, break even isn't that bad, right? But I made an educated guess. And in my alert, I specifically said, I'm adding to my position here because I think this can still spike. And what we got was, another little spike to the 390s, and then another spike to 396. And then the ultimate failure right here was just before noon at 4ish. So I was traveling this day, so I wasn't going to hold till noon, but I got out in the 380s, and I still ended up making $1,500. Where is my trade? So MGT, I made roughly $1,500. In KPT, I made roughly 200. I sold that way too soon, and it turns out I sold MGT a little too soon. But when you're traveling, you're not going to get perfect executions. But both of these, I mean, KPTI could have been like I guess I would have lost like $500. And MGT, I would have broken even. So I made roughly $1,700 on these two trades because I dip bought the low volume panicked. Now, again, it's scary to just buy a falling knife. If you try and catch a falling knife, you get your hands bloody. But when it's so low volume and when the stock is so close to breaking out past the key range, I give it a little time on both of these. In KPTI, I mean, I could have held it 2 more days for the 11s. MGT, I could have held it 2 more hours for the 4s. So both of them exceeded my expectations, but both of them worked out well. And I know a lot of you guys are confused about this. Like, Tim, you say always cut losses quickly. So I have to make videos like this to show you there's no always in trading. Okay, it's more of a guidelines, really. If you watch Pirates of the Caribbean with Parlay in the Pirates code, you're trying to judge, but just like the Sykes sliding scale, if you watch my Trader Checklist DVD, nothing is an exact science. So if I try and do these kinds of trades, maybe I double up and then it just keeps going down. And guess what? I would cut losses quickly. But both of them, bounced quite nicely. So that helped me understand that I was on the right track. Um, and that's all you can try and do. You make a thesis and you try and wait and see, and you see how the market rewards you or punishes you. So I've been doing this kind of pattern for, I don't know, probably 10 years. And it doesn't happen every day. It doesn't happen all the time. Most of the time, I will just cut losses quickly. But when the stocks are right within breakout range, that makes short sellers a little more scared. And that's why, sometimes you get not necessarily the breakout or the spike right at the open, but sometimes it happens midday or in the afternoon or even the next day. So I would not do this if I'm just buying a random stock like THLD that has a bad long-term chart, or ATEC, which just had a terrible reaction to its initial spike. But when a stock like MGT has already spiked big the day before, and probably maybe it just got a little ahead of itself. It MGT had the spike, it had one spike and then it had another spike and then it probably got a little ahead of itself. So maybe this panic and this drop is just some consolidation, but it still has some spiking left into it. KPTI, again, I wish this were closer so you would understand, but when it had the initial spike, maybe it just got a little ahead of itself. And that's why you have this little panic and this dip. And that is a dip buying opportunity. When a strong stock gets a little ahead of itself and it still has potential to spike more. And you can see here it spiked some more here to the mid 10s, then failed. And then the next day it spiked all the way to the 11s. So you could have actually dip bought it here, here, and here. And then, the pattern changed and now it can't bounce and it's a failed breakout. But for a few days, when you see these dips being bought, I should also mention that KPTI, I'm not just buying it randomly. I'm buying it at support. It had clear support right in here the day of the initial spike at 9-ish. So when I'm buying it at 9:01, it's a very specific entry point where if it goes down to, I think the low here was like 8, what was it, like 895, 896. That's how much room I'm giving it. If it starts going like 890, 880, I'm out. And so, okay, I lose another 20 cents by risking it. But as it turned out, I mean, all within 2 hours, there was literally $1 a share of upside. So if you look at it, if you ignore your first trade, pretend like you're not even in it. And I wouldn't do this also if you had a big initial position. Both of these, I had very small initial positions, which is good because that allows me to average up or, average down, but double up on my position. I would say that try to actually forget about your first trade and now think about it as a whole new trade here at 9:01. And again, I'm dip buying it, so I know that it's already spiked and it can get back there. It's easier to get back once a stock is already spiked. And if I'm wrong, I'm going to lose 20 cents a share. I didn't even know that it would go back to 10.20. I thought, okay, I'm going to buy it here at 9:01. I think you can get back to like the 960s, 970s. So I thought there was like 60 or 70 cents of upside. And again, if it kept dropping, I would cut my losses. I'd lose like 10, 15 cents a share. So with this new trade, if I lose 10 or 15 cents a share, or if I'm right and I make 60 cents a share, that's like 3-4 to 1 risk reward. So it's a favorable trade on a stock that I know maybe just got a little ahead of itself. So you'll see me do this every now and then. Don't be surprised. Don't question it. It really won't happen every single day. The vast majority of time, especially when the stock is not, close to a breakout level, I'll just cut losses or I'll get out break even, or maybe I'll get out for small gains. But when I think that it has a shot at respiking, I'll give it that shot. And, both of these worked out, so that's nice for this lesson. It's not always going to be so perfect, but you want to win more times than you lose. It's okay to be wrong. If you look at my recent trades, I've had some losses. But if you look at my overall track record, my losses are a few $100, 275, 143, 597, 354, 452. So none of these are more than $300 or $400. And then some of my recent gains are 2,000 or 1,500. So focus on trying to have bigger wins than your losses, and your profit graph will look like this. And, I've been traveling for the past month, but I still managed to make nearly $10,000. Discipline trading, trading with rules. Please watch my Trader Checklist DVD. Watch it all if you can. And I'm looking forward to seeing many of you guys in Orlando this weekend. Thank you.